So I want to jump into the sector spotlight and talk about the industrials, which is huge in terms of determining the underlying market. It hasn't outperformed this year, but they've done well this week. Transport participation is just as important as the financials participating in the market. So let's start with the IYT, which is the sector ETF.
Yeah, the IYT had a good 2-day move. So it just shows you how if you time these well, you could get a little bit more bang for the buck. They haven't been leading the market, but it's important for their participation. So if you take a quick look right here, you will see that they're still in the lower end of the range. Like the Qs already took back the 50-day and already took back the broken support that becomes resistance. It's down here. But as the market tries to broaden out, you get more sector participation. So right now, this could be a trade as it gets through 84. It's already had 3 days, so I wouldn't be aggressively buying into resistance. What I'd like to see is it hold a bit higher, go sideways, so show some commitment here. Show that you could hold above this 81 and not just go back to the lower end of the range. And then eventually, we're going to bust through this 84, and then this ETF could easily be back to 90 with a better market.
I think it's done well this week because a lot of the components of the IYT are the railroads, which they saw minimal impact from Irene. One of the brokers took up Kansas City Southern with an upgrade this Tuesday, so I think a lot of the momentum could have been due to that. Let's take a look at UMP, which is one of the leaders within the group.
Okay, I'll take a quick look. I heard some chatter on the floor about it yesterday. Stocks performed well. It broke support, showing extreme weakness, but then had no follow-through, reversed back up. So now you've had 2 days, same story here, 3 days trying to fill this gap. I think that it's going to have some resistance here. I wouldn't be chasing this. I'd rather see it come back, try and retest 86 before going higher. But like everything else, you have this lower channel. It does have some room back to resistance, which is around 94. This was the snapback. The question is, kind of get some follow-through.
So looking at one of its competitors, CSX, attractive dividend yield over the past decade, they've consistently taken the dividend up.
Let's take a quick look, see if it's looking any better. CSX, this too, not showing really relative strength. Look where the 50-day moving averages, look where it broke down from. But if you're not in it, it's not your problem. You do have a bounce back right to resistance. There is a gap in front of it. So short term for a cash flow trade, if it gets above 2085, could easily fill the gap. But then it's going to have to do some work to get through this 22 area. It's not going to get there on the first attempt, especially considering that these things don't move so fast.
So moving on to the truckers within this space, let's look at CHRW. I remember last year that was a name that had a lot of momentum, and the traders actively use this as a position.
Okay, CHRW, take a look here. This one looks, it's a little different, but again, not a leader. It's closer to its 50 days, so it's showing a bit more relative strength. This already filled the gap where the other ones did not, showing you, so it is a bit stronger. This one has some room back to about 72. This is where we'll get some big resistance, and then obviously at this area, it's going to be like a brick wall. So there are trades here, not a leader, but if you want exposure to this group, this looks actually better.
And finally, moving on to FedEx, which is a name that everyone is more familiar with, ticker FDX. Amazon was saying, we'll talk about this later in Quick Hits, that it expects to see the online shipping season for 2011 to be even bigger for 2002, which clearly bodes well for a UPS FedEx.
True. If you order it online and don't go in your car, it's got to be delivered. So let's see FDX. FDX right now, another one, bottom end of the range, not really showing any leadership. It filled its gap. It's got room to about 80. And then if it were to clear 80, your next level would be around 83 to 85. It is a laggard, but again, as the market broadens out and as people get a little bit more confidence that other situations and sectors could participate, some go for laggard. So there are new high trades and there are better vehicles as investments and go-to stocks, but then there are also catch-up plays where if you want exposure, there's activity there. It's just not the best place to be.
So the transports, they did a good job for us this week. It'll be an important indicator to see if we can carry the momentum through for the overall market. Let's jump to a quick commercial, and when we come back, we go into the trenches.